Hey guys, welcome to the Investor's Guide of Memphis Real Estate. I'm your host, Dean Harris, and as always, I'm with Douglas Skipworth. How are you, buddy?
Hey man, doing great.
We're bringing you this podcast to give you the boots on the ground knowledge to be a successful real estate investor here in Memphis, Tennessee. Please like and subscribe to the Investor's Guide of Memphis Real Estate wherever you listen to podcasts, Apple Music, YouTube channel. We've got Spotify, Facebook, everywhere. Yep. Show sponsors are listed on your screen below. We would not be able to do this show or run our rental business without those guys. We've got Triumph Construction, River City Title, Corlin Financial, CrestCore Property Management, and Will Griffin with Griffin, Clift, Everton, and Mashmeyer. I help buyers and sellers every day. If you're listening to this podcast and you're interested in buying in Memphis, shoot me an email, dean@crestcore.com. I'll send you our buyer profile link, get you all set up with our team. If you're looking to sell anything here in Memphis, shoot me that same email. I'll give you a free evaluation of the property and get you going and get that property sold. So, how you doing, bud?
Doing great.
Yeah, I think I am too. This has been an exciting first quarter, of our market, and we're entering into the spring season. We're now into April, pretty good here, and about halfway through, right?
Yep.
And today's tax day. Yeah. I'm excited about what the next 6 to 9 months holds, really, if I'm being honest with you. I know there's chaos in the world, but I am excited about interest rates coming down.
Yes.
Today's topic is rates are falling. What should you expect?
Yep.
What are the expectations that we have that maybe you should have, things to look out for, trends? None of us are fortune tellers, but the way I look at this is I try to look at patterns. If any of you guys play Baccarat, it's a pattern game. I was going to say that. So you try to just predict and look at patterns and listen to smart people, and they're smarter than me, and try to figure out what they're telling us. So I believe interest rates are going to have a tick down this year. I believe 2, maybe 3, depending on how things goes, interest rate drops, right, or decreases. I think right now, if you go get a home loan, a conventional home loan, and you're out there buying 6.5.
6.5 is what I was going to say.
Somewhere in that department. If you're buying an investment property now, you could probably look at 7 to 7.5.
I was thinking 7.5.
Yeah. So right into that ballpark is where you're going to land. So
and both of those, yes, that's exactly right. And both of those are priced differently.
Yeah.
Home mortgages are, real technical, based on the 10-year treasury.
This is good. Yeah.
And it was really low years ago, and then it came up really high, and it's kind of fluctuated. But they're projecting that to continue to decrease as the economy kind of sputters.
Because that's what it's doing.
As it sputters, that rate will come down. So home mortgages, owner-occupant mortgages will come down. That's the anticipation by the end of the year that this will continue to come down.
And by sputter, I think that's a good word to use right now.
Yeah.
And if you think about what that actually is, and you hear a car engine sputter, there are bursts of gas and energy. And RPMs, ramp up real quick and then it stops. So pay attention, because there are ramp up opportunities now, and we're going to clear that injection.
That's right.
And then all of a sudden we're going to be running. This is why I wanted to do this podcast.
Yeah,
today.
I think that's good on the sputter, because it isn't like a drop off the cliff. It's not a crash. It's not a crash and burn kind of thing. But the commercial rates, as you mentioned, in the 7.5 range, those are based on the Fed funds rate, which we talk about the Fed cutting rates, and that's where they're projected to cut a couple more times as the economy sputters, that they're going to cut. Yeah. So that will lower the borrowing rate for the banks, which is what they in turn lowered the rate that they give to us. So,
that's right.
So both rates, whether you're getting owner-occupant mortgage or using Fannie or Freddie to do it, or the commercial rate, you should be in good shape.
As we go along. And I don't think it's horrible, truthfully, now. This is not a horrible situation we're in.
It was
it's
higher months ago.
That's right. Oh, my gosh. Yes. So talking about the rates, one of the things I like to bring up, it's like, what does this mean? Like all that good information that Douglas just gave us. Like, what does this mean for us? I know the first thing it means in a big, broad paintbrush stroke here is every quarter of a point that the interest rate drops, according to the National Association of Realtors, 4 million buyers enter the market.
Okay.
Now, that's owner-occupant.
Gotcha.
That could be investors. That could be anybody. But keep that in perspective.
There's a lot of pent-up demand.
There is a ton of it. And that was a couple of years ago stat, a year and a half ago stat.
Okay,
it might be more than 4 million now. Yeah. So you can prepare yourself, hey, we're waiting for it to drop another point. That's fine.
That's a lot.
But man, that's according to NAR, that's 12 million buyers.
Yeah, I'm imagining, like, I was thinking about it just like something that got me thinking about school and kids. You remember when you used to line up for recess and you'd hold that door and they'd hold that door and a teacher wouldn't let you out.
Yeah.
And they wouldn't let you out and you wouldn't let you, and then
finally,
boom. And those kids were everywhere. Buyers are going to be like that sometime.
You've seen those old Miss Rebels come out of Vaught Hemingway Stadium and that big thing. They just come busting out of there.
That's right. Hotty toddy.
But anyway, so yes, you're right. I believe that is going to drive more people into the market.
Yeah.
And if you just do some simple economics, our demand is going to increase and our supply is going to kind of stay the same. So,
because supply has increased a little bit recently.
It has. But if you inject it with 12 million buyers with a 1 point decrease in the rate, that will quickly dry up and the numbers are going to alternate again. And then when that happens,
potential price increases.
So I'm telling you that they're going down. I'm not telling you anything other than, hey, this is what we're looking at this year. But I do feel like as the year goes on, we're going to see rates drop. We're going to see sellers become more confident.
Yes.
Right now, the last year and a half, they have not been super confident. Buyers
sellers.
have been able, buyers have been able to come in and kind of get what they need to get.
Yeah. It's not necessarily a buyer's market, but it is definitely not a seller's market.
That's right. And I think if we drop down another point and a half over the next 12 to 18 months, it is going to flip
to be a seller's market.
Yeah, because there's so many people that are saying, hey, I'm not getting rid of this 3% interest rate to get 9.
Yeah.
I will for 5.5.
Yeah,
I'll do that. So that's that's exactly right.
Yeah,
so that's what's going to happen, and we're going to see more of that. So be prepared for that. Be ready by talking to your banks and if you're an investor, and you're out there now listening to talk to your banks, talk to your property management companies. We did a whole podcast on getting yourself ready, but speaking to your bankers and asking some questions. I had lunch with both of mine 2 weeks ago, and said the same thing. Hey, I'm going to be ready. I've got some things I want to refi and that I bought with some high rates. If you go back to our 2023 podcast and listen, I bought houses at a 9% interest rate, some of them high, too high, right? Now it's time to move some of those down. And the pricing is right.
Date the rate, marry the house. There you go.
Got great houses for much lower price than I could ever have gotten them now.
I was going to say, they're more valuable now.
Much less
that's
in
cool.
12 months when the rate goes up. So it's not the cheapest thing in the world, but if you look out 30 years, it's the best thing in the world that you can do for yourself. So finally coming out of there. Good. But more buyers are entering the market. We talked about that. Just have your team ready and talk to management companies and your banks and just let them know, that you've got, understand pricing's gone up. We've talked about that. This is why you might want to buy early. We did talk about this, and I try not to come on, this is a little, obviously personal, but I try not to come on here and talk about, hey, buy a house for me, like me, you, management, all the companies that we, that you own here.
You're the sponsors.
We work with. Yeah, that's right. So I try not to get into a lot of that, but I will tell you, if you want to buy something at what is a discount now or a discount later, you need to do it now. So I really try not to get on and just put the full court press on, hey, you need to buy. But if you're interested in investing and you are thinking about getting into this and you've been listening to the podcast and you've been, staring at us for however long and learning about Memphis or what have you, I would encourage you to go ahead and use
now
this
is a good time
opportunity to do it now. Because in 12 months from now, in 6 months from now, you're going to see some higher rates, lower rates, and you're going to see some higher pricing.
And more competition on offers.
And the first thing that'll happen, it won't be necessarily a higher price. It'll be sellers aren't budgeting.
That's what I was going to say. Is going to say all of a sudden, we've talked about this before, the competition amongst offers is like, well, all cash, no contingencies, all cash offers. We've been there before.
That's right.
Lower inspection periods.
So there's
get beat out.
That's exactly right. So now, if you might be the time to go ahead and jump in. Maybe you've done everything but start offering, and start look. I would definitely say let's go, because you're that investor. You're there mentally. You've prepared. You've got everything done. You just need to find the right home and get really engaged. We need to do that. Dean at CrestCore.com.
I was going to say, we did a great show a few weeks ago about buying. Being prepared to buy, making offers.
Yeah.
And you had producer Alec had a great little short of, You're always going to be a buyer.
Always.
Till you die. A little tombstone on there with
so
you.
Great.
You buying till you die. Buy
Which
till
is
you
the
die.
honest truth. And I don't mean that like there'll be a day, obviously, where I don't work nearly as much, but there won't ever be a day in all likelihood, because some of my kids are following along with this.
Right, that's right.
That
Looking
I'll
for
ever sit
opportunities.
here and go, I'll pass.
Yeah.
Right? No, of course. Let's grab it and keep moving. So yes, we're always going to be searching for that right property. So understand your prices could go up. This is why I've encouraged to buy early and buy now. Another thing that people are doing, I talked to a guy yesterday afternoon. He's selling a couple that are not his best performing.
Absolutely.
And what he's doing is gearing up to be prepared for this rate decrease and be able to go get some other assets. So this is another one of those opportunities where I don't want you to miss and not listen to what I'm saying. I just said it a minute ago. If you want to buy it on the cheap, you need to get in now. It would be like a stockbroker calling you going, hey, this is getting ready to blow up over the next 12 to 24 months. You need to buy now. That's what I'm telling you now about real estate in Memphis. Okay, so maybe selling a property now, and opening up some cash that'll be available for you to buy that new asset as these prices go up and interest rates come down is a good idea. So I'm just giving you some of this advice ahead of time to try to set yourself up for what's coming here in the next few months. We said it a minute ago. We said go ahead and buy now. It might be time to sell now. Get something off the shelf where you can get a better product later.
Yeah, I mean, I think there's the analogies of, you're bulking up and then you're, leaning down as kind of the weightlifters or muscle building and then kind of getting cut. And I think about that with houses. It's like maybe you get the houses you want. We talked a few weeks ago about buying 100 portfolios. Like you get it and then you realize, hey, there's some in there that I don't need. And you wean them and cut them and you become a lot stronger and a lot better player and performer and investor by getting rid of some that just didn't meet the expectations.
I'm doing that, I think, for the first time.
Yeah. I've been encouraging you to do that for years. I know you're to that point now.
Yeah.
But it took me years before I got there.
Yeah.
And then I got to that point. And you helped us do a lot. And that's probably some of those times are the times where you really reap the benefit of what the hard work you've paid off.
Absolutely. Because you're putting in this hard work now in a time where things aren't awesome, right? Available houses aren't awesome. Interest rates aren't awesome. Everything is not awesome right now. So if you're grinding and you're powering through it right now, and you're able to run a successful investment business, and you're active, get ready, because things are about to happen for you. You're about to go on to a new level because of what's coming in our economy and what's coming in with our real estate market here in Memphis. I believe that wholeheartedly.
Yeah.
I mean,
it's what you're doing.
I'm doing it myself. I'm actually selling an investment property now.
Good.
And it's my first one. So I'm beginning to take some of these and move them out because you can tell, I'll just tell you, when you build a portfolio of any kind of size, you're going to have some that aren't operating well. It's just, so what, you bought it right. I don't care.
Then you can sell it.
Yeah, go sell that story to someone else who had, I don't
somebody
care
else's opportunity.
Yeah.
That's great.
Yeah, you bought it right. You did everything right. It doesn't matter. This is investing. This is not freebies, right? No one said because you get into this that it's an automatic thing. It's stronger and more Teflon than other stuff, but there's no guarantees in this. So I mean, and I've had to come to realize that a little bit. It's like I battled with that over the last kind of year and a half. It's it's not, and I have to tell myself the same thing. I've told you guys this. It's not defeat when you sell something.
No. You're supposed to be trading up or trading into a better situation.
Right. So I have to look at it and go, hey, I'm learned something from this. I learned that this was not necessarily the right thing to do in this area or whatever the decision was that I made. So, no, I understand that. I'm doing it right now. I'm selling some things because I want to free up some more capital. I like to free up because these are some early ones that I have capital in. And I'm like, why do I continue to do this?
Yeah, I've done it. Have you
ever just had self-therapy with this crap and just been like, why am I still doing this? Yeah. Why? And what I mean by this is 123 Main Street. That's not Main, and there's nothing about it that's awesome.
Yes.
You know?
Yes.
And it's like, why am I doing this? I'm repeating bad tenants. This is, whatever. The maintenance won't stop.
Money pit, whatever. It's just, there's something.
So I'm finally beginning to do a little trimming the fat. And it does feel good. It's liberating, so to speak, that you cross over a threshold or a hump in your mind that you can sell something and keep moving.
Yeah, and not to mention the mental anguish that you don't realize that you're spending caring for a lame duck, that all of a sudden you have all this mental energy that comes back.
Yeah.
And propels you forward. It's just great to clean things up.
You could write, without any details, you could write a book a little bit on that.
Man.
Of reeling things back, of removing things in your life that may appear to be a step backwards, but lo and behold, it was a shotgun forward.
I mean, I was going to say, I feel like so much of life is like multiplication, simplification. Then you multiply, then you simplify, then you multiply, then you simplify, then you multiply, but it just keeps getting bigger and bigger and bigger.
But the inner core keeps getting better. And better
you have
and
to
better.
do both. You can't do one only. I mean, if you just we know people who just multiply, and then it's
they're
trash.
Nothing to everybody.
And if you simplify, then what are you doing? It's got to be a kind of a balance.
And truth be told, that's a personal thing too. You can use that in your personal life as well.
Oh,
with
for
people and everything that you surround yourself with.
There's a lot to that.
Lot to that. But great. Okay, I thought today's podcast was good. Communicate with everybody is how I was kind of leaving it. Just make sure that you're talking to your property sources and agents and people that send you properties. Hopefully, there's no other property source other than me here in Memphis. But number one. Talk to those folks.
They're others. They're just you're number one.
Yeah.
So that's the way I look at it. It's like there are lots of others, but you're number one.
We try our best. We try our best. All right. Anything else? Guys, awesome. Dean at CrestCore.com if you have anything else on this. And we'll see you next time.